A lot of people, including Alan Valdez, that trader's clients, made a lot of money, but it is perhaps those who didn't make any money at all, didn't even have the chance to make money, that is perhaps a more interesting story. Charlie Gasparino.
How you doing, Liz? I will say two things about what you last said. I said, number one, I bet you the guys that run Snapchat knew that this thing was going to pop to $25. I'll tell you why. And number two, I bet you Alan Valdez's clients did not make a lot of money on the open in this. And here's why. We should point out that every IPO has a degree of retail allotment. It's usually about 5% of the IPO. And those are the retail people that get it through the major underwriters like Goldman Sachs or Morgan Stanley who are running the books on this thing, and they get it at the IPO price. Okay, we should point out that this IPO did not allot 5% to the retail. It allotted something like 1 to 1.5%, which is a 70% decrease from the normal allotment. Now, what does that mean? That means that most of the stock on this thing was given to people that are not going to sell, that are long-term holders, and it basically creates a scarcity value in the stock. So you do know that when this thing opens, based on where the supply is of that's outstanding, this thing is going to pop significantly. So when I don't know exactly where Mr. Valdez's clients bought at, but I bet you they did not buy at 17. They were buying at 23 to 25 at the least.
Alan, where did your clients buy? Charlie Gasparino's asking. At 17? Did they get it?
They got it. So they got the pre-opening. They got the pre-opening.
Okay.
Yeah.
So they got the pre-opening.
How could they have gotten the pre-open if through Morgan Stanley? I mean,
they're Hong Kong guys.
Yeah, but unless they got a broker at Morgan Stanley and they're not buying through him, right, you're not getting that. You're not getting 17. Okay, you're getting, unless I'm missing something here, in order to get that 17, you have to be a preferred client of one of the underwriters of this thing, and they had limited, by the way, they did not have millions of shares. Most brokers had 1,000 shares, if lucky, because this thing was not widely distributed. So I don't know how these guys got 17. Maybe there's a nuance here that I'm missing. But the bottom line is this, Liz. They created value through scarcity, and this is why the stock is cratering right now. We should point out that that the market is starting to come to terms with this was bid up on scarcity. Most retail, the vast majority of retail, did not get this at 17. They got it at 25 probably. And the real question is a company that's losing a lot of money, that might have a repetitive service, because you see stuff the same sort of stuff with Instagram. Is it worth this type of valuation?
Yeah. Well, you can look at any of them. Twitter.
No. Facebook is different. Facebook made money.
Facebook is absolutely different. But
they made money in the beginning. They had a business model. They had a problem with management more than business model. Yeah. Twitter, you can make the case. But do you really want to buy the next? You want to buy Zynga, and you want to be holding that right now?
It's a dangerous game. It really is. Momentum names are dangerous games. Charlie, thank you.